It's good to be home. I love being at my mother's, celebrating my sister's birthday. But something about the cat just clawing my legs the whole video just like is on point. Now, here in this video, ladies and gentlemen, we are going to discuss this market and Tesla and some of the news that came out towards the end of the day that caused Tesla stock to slip a little bit. You can even see here on Webull, there's a news notification that news had come out or came out. And we will discuss that here in today's episode. Now, there is very important economic data as well coming out tomorrow that we need to focus on. Hit that like button and subscribe to the channel. Ladies and gentlemen, I hope you are locked in on your future. I hope you're locked in on your craft. If you're watching this video, you're obviously into markets, and this is going to be the best period of your entire life for investing, in my view. Again, once we get out of the September seasonals, we can get into what I believe will be the last 3 months of the year, which will be a pretty impressive year-end rally. So, oh yeah, did I tell you guys? I thought she was a boy, so I named him Jose. Well, she is a she, so her name is still Jose. What's up, Jose? What's up? Crazy ass cat. The craziest cat I've ever had in my whole life, by far. But let's go ahead and get into today's episode. Oh yeah, and by the way, if you were hearing all those ding 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 dings, those were the trading community and notifications. Now, if you guys want to come join that, check that link out down below in the description of this video. Portfolio had a great day today. It is up 91% year to date. Obviously, not a recommendation, not financial advice. This, yes, we're outperforming like almost all of Wall Street, okay? Like, we are in the top 0.1% of Wall Street firms if we were a standalone hedge fund with our own unique strategy. We're going out, finding and investing in small cap AI stocks before Wall Street even knows they exist. By doing this, I believe you can lower the risk profile and amplify the returns. We talk about this all the time in the group. I've mentioned this here in videos as well. Long story short, it's not financial advice. I share what I'm doing. I share the stocks I'm investing in. I share my position size, all of that. But what happens in the future is to be determined, okay? You must make your own opinions and conclusions and really understand the companies you are investing in. But if you want to potentially take it to the next level, come check that out. Link down below in the description of this video. First things first, let's start with this news notification. And it says here that this is actually trending. Now, Tesla faces a class action lawsuit over alleged securities fraud. Investors urged to take action. A class action lawsuit has been filed against Tesla alleging securities fraud that affected investors between April 19th, 2023 and June 22nd, 2025. The lawsuit, initiated by the law firm Levy and Korsky, seeks to secure compensation for shareholders who suffered financial losses during this period. The firm, known for its expertise in securities litigation, encourages affected investors to come forward and participate in the legal proceedings. Again, these things kind of happen all the time, okay, with any stock, but in particular Tesla. Like, you have one bad day in Tesla and you got a new lawsuit. That's just a part of the game on Wall Street. Even though this seemed to have maybe pushed the stock lower, like there was a pretty, I mean, like from the middle of the day, once that lawsuit news came out, you definitely seen a bit of a slide in Tesla, a little bit of a recovery into the end of the day, and then a little bit further of a slide. I don't think this is not like some kind of big negative catalyst. It's something that, again, catches the headlines and the algorithms. But is it really going to affect Tesla? No. And the fact of the matter is, we're in September. This is a weird seasonal period. If it wasn't September, I don't even think Tesla stock would have really reacted to this. So I think there's a bit of that as well. You guys got to remember, on a broader market basis, there's this urge to sell, this urge to hedge in September. The algorithms are literally programmed that way. But in single stocks as well, something like Tesla that is so polarizing, it is a large company, it has a high beta, you are susceptible to single headlines as well that can move the stock more than you otherwise would have seen, especially in the downside direction if and when we do get negative news. Now, you also have this article that came out, which, you know, honestly, holy crap. Dude, this cat is a literal psychopath. That one actually hurt really bad. Jeez. If anyone wants a cat, free, 99. Damn. But this article, which again, what I was saying is when I see these bearish articles, I actually get really bullish because the fact of the matter is you only make money as things are not priced in that actually happen. Again, for an example, if Tesla is expected to sell 2 million vehicles this year, and I'm just throwing a number out there, and they sell 2 million vehicles, the stock priced that in 6 months ago. You're not going to make money on that. If the stock's pricing in 2 million vehicle sales and you sell 2.5 million vehicles, theoretically you should make money on that, unless the stock priced in way more of that ahead of time, okay? And that's where you kind of got to follow markets. You got to look at price action, look at sentiment, and that's how you determine what's really priced in, okay? Well, when it comes to Tesla, as retail investors, as investors that follow Tesla better than analysts, we have a very good idea of what is priced in, okay? I have a very solid understanding of what Tesla is pricing in. And it's not pricing in much in terms of AI, robotaxi, Optimus, none of that. You are pricing in, let me be clear, a good Q3. So like that's not going to be something that really moves Tesla higher if we get a good Q3. Maybe a little bit, but not much. We're not pricing in a good Q4. I think you've started to a little bit, but you're generally not pricing in like a really good Q4. If we get a really good Q4, that's going to mean Tesla has an upside surprise. But the big move, like the double or triple from here over the next 6-12 months, comes down to robotaxi. Can Tesla scale robotaxi to be a larger and larger business? Okay, if Tesla can get to $1 billion or $2 billion or $3 billion in revenue next year for robotaxi, Tesla stock is absolutely going to explode on that, okay? Not only just because they're growing a new business, and that's revenue growth, but because robotaxi is going to be a lot more profitable. So think about it like this. Tesla has 3.3 billion shares outstanding. Let's assume they do like 3.3 billion in revenue next year from robotaxi. I think that's pretty optimistic, but not impossible. Well, 70-ish% of that should be bottom line profitability. Call it 50% of that is bottom line profitability. You're going to raise EPS, just to keep this simple here, 50 cents per share just next year from AI. And the scaling of that could become massive. Now, back to this article. It's titled, Tesla's not the AI leader you wish it could be. When I see articles like this and read articles like this, it makes me very bullish because it reaffirms that we're not pricing in great things for Tesla, that there is doubters, okay? I say this all the time, especially to members in the trading community. Like when we have bad days in markets, I love that. I love having bad days every now and again where Wall Street just kind of freaks out for no reason. Like that is the biggest green flag that you can see in stocks. Why? Because it shows you, not only you might just think there's a lot of bears, it shows you that there is still bears out there, that people are not so bullish on whether it's AI or whatever it is at the time, that people can still get bearish. And if people can still get bearish, you are not in a bubble. You are not near the top, and there's likely a lot more upside from here. The fact that we're even having a weak seasonal September shows you we are nowhere close to a bubble. If this was a bubble, it wouldn't even matter of, September, right? With weak seasonals. Markets would still just be doing their own thing and going higher, okay? Now, the summary. Tesla Inc.'s core automotive business is deteriorating, with significant sales declines in Europe and China and intensifying competition from rivals like BYD and XPeng. What a joke. What a joke. Wow. Yeah, this is how unknowledgeable some people are in Tesla. Sales are accelerating in China, and there's no mention of the US, but sales are accelerating yet again in the US. Now, it says Tesla's financials show sharply reduced cash flow and limited capex, making its AI investment capability negligible compared to true AI leaders like Meta, Google, and Microsoft. You gotta give it up for the lack of brain cells here. You just gotta give it up. Tesla has been investing in AI long before any of these other companies were. Tesla has already put in the money to do this. Now, Tesla is targeting something totally different than other companies. Even Elon said, like Tesla compared to XAI, they're targeting two different things. Tesla is targeting real world AI. X is targeting like online AI more so, right? Large language models, things like that. Tesla is the king of real world AI. The fact that like everyone doesn't get this makes me very optimistic. Elon Musk's bold AI and robotaxi claims lack credibility given Tesla's weak fundamentals, declining sales, and inability to match investment scales of businesses truly worthy of being called, quote, leaders. Tesla's valuation is unjustifiably high relative to its fundamentals and even to true AI leaders. I maintain a strong sell rating on Tesla stock, remains overvalued. Guys, how bullish? Like, it doesn't get more bullish than this. That's incredible. Because the fact of the matter is, some people will just never understand AI. Some people will never understand what Tesla is trying to do until Tesla is a $10 trillion company. Tesla's going to be a $10 trillion company one day. It's going to 10x. It's going to be $3,000 a share. And people are going to make the same articles and arguments that they are making today. That's just what we have to accept. Elon is a polarizing individual. Tesla is a polarizing company. And it attracts the bears. But that's a good thing, because the more bears you have, the more upside you can have. The upside stops in a stock when everyone is bullish. Okay? And we're far from that in Tesla. Now, Barron's wrote this article that came out at 4:17 p.m., so not too long ago after the markets closed. It says Tesla stock rises. It might be the robots. It says there isn't much news to pin the gains on. Shares could have been bouncing back after a weak first few days. Coming into Wednesday's trading, Tesla stock had fallen 4 consecutive trading sessions after it closed at $3.51. $351.67 on August 26. Wednesday's level was still almost $18 or 5% below that price. Now, they referenced the surprise news that I talked about in the prior video with Mark Benioff, Salesforce CEO, that says, quote, "The boys are back in town. Amazing what Elon Musk is doing to create the future. Just inspiring." Now, it says Tesla plans to start selling significant quantities of AI-trained humanoid robots in 2026. According to Musk, it hasn't sold robots to external customers yet. Nothing in Benioff's tweet changes any of that or provides new information, but sometimes evidence of Musk working on Tesla AI projects is all it takes to move Tesla shares. Now, there's also another video posted with Mark Benioff and Elon where Mark Benioff is talking about, you know, $100,000 to $500,000 these bots could be worth, and the productivity gains that we could see from this, and was really talking up the Optimus project, which, you know, as weird as it is, a lot of Wall Street like respects Mark Benioff more than Elon. Again, because nobody really hates Mark Benioff, right? No, nobody really, like, you either know him or you don't. You don't dislike him. You like him, right? You respect him. There's a good amount of Wall Street that no matter what Elon does, Elon could, you know, make the cure to frickin' age, right? People could live forever and some people would just still hate Elon, right? That's just is what it is. So when you get another high level executive like talking like this, it's a substantial catalyst for Tesla stock. And I think if it wasn't for the weak seasonals, you would likely have seen Tesla go up a lot more and hold the gains. Now, again, you did have the class action lawsuit kind of beat the stock down a little bit, but you get the idea. There's some weird seasonals going on, and it is to your opportunity, right? If you're paying attention to all of the good things going on at Tesla, all of the news every day, on the back end of this, October, November, December, it's going to set Tesla up for a very aggressive rally to the upside. In my view, I actually think October, November, December could be some of the best 3 months you've ever seen in markets. Like, we could see an absolute explosion to the upside. And then 2026, I mean, it's going to be unrivaled. I believe we're going to have, again, a year like 2021 with less like bubble activity. If you're a bad company, you're going to do bad in 2026. But if you're a good company, AI company, working towards the future, you're going to be rewarded for that. Not all companies are rewarded for the good that they are doing right now. Believe it or not, it's not like a super euphoric market. I think we could be heading closer to euphoria, and then maybe 2027, 28, 29, you could start to get into bubble territory if the euphoric market plays out in 2026 like I think, but I think we're still far off of that. Also in the news today that kind of got overlooked, even by myself in the video earlier today, Piper Sandler reiterates their overweight rating on Tesla and set a $400 price target. So the rating affirmation followed the firm's tour and meeting with the company's investor relations team. The firm noted how Tesla's robotaxi service has expanded to more than 170 square miles, while Waymo's service area is 90 square miles in the same city. The company's full self-driving version 14 is set to arrive in September/October, enabling Tesla owners to use software that is similar to robotaxis in Austin. They say that tariff costs may rise in the second half of the year, impacting cost of goods sold, estimated at a couple thousand US per unit. Meanwhile, US tax credit changes will lead to a pull forward in demand for Tesla and competitors during the third quarter. The firm further estimated that by 2026, Tesla's Optimus humanoid robot is likely to move and stage parts within Tesla facilities. They say that Tesla will own robotaxis, but licensing, specialty fleets, and customers will all contribute. They say there are many ownership models for FSD-equipped cars. The final mix is hard to predict. They say tariff costs will rise in Q2. The impact of cost goods sold could be a couple thousand US, but they mention the pull forward in Q3 for both Tesla and peers. They say any post-Q3 demand hangover may be mitigated by sales of Tesla's lower-cost vehicle. They say Tesla's guiding principle, defend free cash flow and protect self-funding status. By this time in 2026, Optimus should be moving/staging parts within Tesla's facilities. They say Optimus can work 18 hours, 2-hour human shifts. At that rate, a $100,000 cost would be justified. No, we are making minor estimate revisions to reflect updates after Q2 earnings. So a very bullish take on Tesla. Again, not a very wide held, view in the institutional world. And some are starting to come around more to Tesla. But again, there's still a lot of bears, which keeps me very bullish in Tesla. And honestly, the stock is significantly undervalued. Why? Because we buy stocks not based on the earnings that are, going to come out the next quarter or two. At least I don't. I buy a stock based on the next couple of years, the next 5 or 10 years, right? As rates come down, as there's less uncertainty from a global trade perspective, less uncertainty on the path of inflation, as I believe these things are going to become clearer and clearer in October, November, December, as rates come down, Wall Street will start to extend their time horizons. Everyone thinks they're a long-term investor, but they're not. If they were a long-term investor, Tesla would be a lot higher than where it is today. Wall Street is very much just focused on the current quarter and the next quarter. But as rates come down, Wall Street as a collective will start to focus on the extended future, not just the short-term future. Now, before we go ahead and get into the economic data coming out tomorrow, in final option activity today from hedge funds and institutions, you had 111 different trades today, totaling $383 million with a positive order value of 94%. So it was very bullish. Again, that's good to see. You did have 902,000 shares that were sold short. Again, we have to remember that Tesla is kind of used as a broader hedge, right? Because Tesla's 5% of the index, but it has a very high beta. So you can go out and short, for an example, like half of the market weighting in Tesla. Like, let's say you could short 2.5% of your portfolio in a Tesla short position, but you're really going to be hedging like 5% of the index weighting because of the high beta, maybe a little bit more than that. So Wall Street, they like to hedge using Tesla, especially in September. Like, it makes sense why you had a little bit more short activity today in Tesla versus other Mag 7 stocks. Now, Donald Trump says today it will be harder to win the AI race against China without tariffs. Trump says that Musk has, quote unquote, some problems, but also common sense. Now, in the Fed Beige book, I do like to share this with you because it, in a lot of respects, is better than the economic data we get from the BLS, okay? And what it is you have the Kansas City Fed, Dallas Fed, Chicago Fed, Atlanta Fed, New York Fed, San Francisco Fed, okay? These different Fed regions. They cover their respective areas. Like the Chicago Fed is going to cover Michigan. It's going to cover Illinois. It's going to cover Wisconsin and parts of Ohio. The New York Fed's going to cover parts of Ohio, New York, Jersey, Maine, right? Maryland. You get the idea. So you get a broad overview of economic activity and labor market conditions throughout the U.S. This is basically what the Fed is seeing, okay? So overall economic activity, it says most of the 12 Federal Reserve districts reported little or no change in economic activity since the prior Beige Book period. This is what I've said before on this channel many times. I don't see a change in the economy. Like, no matter what happens with the economic data in September, we don't tend to just like fall into a recession just like organically. The economy's too big. I use the boat analogy. Like, in a small boat, in a kayak, you can turn pretty fast. But if you're in a cruise ship, you don't turn very fast. You don't fall over very easily, right? And this economy is like a cruise ship. It goes, okay? It says the 4 districts that deferred reported modest growth. Across districts, contacts reported flat to declining consumer spending because for many households, wages were failing to keep up with rising prices. Again, that's one reason I don't think you can see inflation, because people are cutting back a little bit, and you will sell less products if you raise prices. And companies don't want to lose market share to protect a little bit of profitability. That long term is going to destroy your company. Now it says contacts frequently cited economic uncertainty and tariffs as negative factors. New York reported that consumers were being squeezed by rising costs of insurance, utilities, and other expenses. Contacts observed the following responses to the consumer pullback. Retail and hospitality sectors offered deals and promotions to help price-sensitive consumers stretch their dollars, supporting steady demand from domestic leisure tourists, but not offsetting falling demand from international visitors. The auto sector noted flat to slightly higher sales, while consumer demand increased for parts and services to repair older vehicles. Manufacturing firms reported shifting to local supply chains were feasible and often using automation to cut costs. The push to deploy AI partially explains the surge of data center construction, a rare strength in commercial real estate noted by the Philadelphia, Cleveland, and Chicago districts. So I will point out there, they are seeing data center, AI investments continuing to surge. It says Atlanta and Kansas City reported that data centers had increased energy demand in their districts. Overall sentiment was mixed among the districts. Most firms either reported little to no change in optimism or expressed differing expectations about the direction of change from their contacts. And labor markets. It says 11 districts described little or no net change in overall employment levels, while one district described a modest decline. 7 districts noted that firms were hesitant to hire workers because of weaker demand or uncertainty. Moreover, contacts in 2 districts reported an increase in layoffs, while contacts in multiple districts reported reducing headcounts through attrition. That's basically like if 5 people quit in the course of a year, they might only hire 4, or they might only hire 3 or 2 or 1. It's not firing people, but as people leave, naturally, they're not as quick to replace them. It says, encouraged at times by return to office policies and facilities, at times by greater automation, including new AI tools. In turn, most districts mentioned an increase in the number of people looking for jobs. However, half of the districts noted that contacts reported a reduction in the availability of immigrant labor, with New York, Richmond, St. Louis, and San Francisco highlighting its impacts on the construction industry. Half of the districts described modest growth in wages, while most of the others reported moderate growth. 2 districts noted little or no change in wages. So, yes, leaning negative in the labor market direction, but not an all-out, again, disaster. And for the overall economic activity, just little to mostly unchanged. Now, we do have very important economic data coming out tomorrow. So tomorrow we get the Challenger job cuts. These are planned layoffs. So last month you were at 62,000. You're expecting that to rise to 89,000. You get the ADP employment change, which is basically the private payroll number not done by the BLS. So last month you were at 104,000. You're expecting 64,000. Or 65,000. You're also getting the balance of trade for July. So the deficit, you're going to get a new GDP prediction or update. You will also get initial jobless claims, something that Wall Street seems to follow closely these days. You're expecting 230,000. Last week was 229,000. You will also get at 10 o'clock in the morning. So that data comes out at like 8:30 in the morning. ADP employment change at around 7:30. Challenger job cuts, or ADP is at about 8:15. Challenger job cuts at about 7:30. So like staggered from like 6:30 in the morning, you're going to start getting some of this economic data. And then at 10 a.m., so as the markets are open for trading, you will get the ISM services PMIs. You're expecting a number of around 51, which would be an increase. Business activity expected to increase. Employment expected to decrease a little bit. New orders expected to decrease a little bit. And prices paid are expected to rise just a little bit. Best case scenario is if business activity, employment, new orders comes in good, but prices comes in low. Okay, so that's what to be watching for, is really prices, and then how is the economy doing? If prices surge and the economy falls, that looks more like stagflation, right? So there's going to be different implications based on how all of these components come in, and that's what Wall Street is really going to focus on. Now, on Friday, you have your non-farm payrolls and the unemployment rate. As I've talked about before, Trump fired the head of the BLS because he said the jobs numbers were inaccurate. So how humiliating would that be if, Trump fired the head of the BLS and then Friday's jobs number comes in really bad? Like, I don't think Trump wants to look like that he just fired someone for no reason, that the economy is not doing great. So, I think the odds are that we do get a good number Friday. But hey, again, we'll see. Anything is possible. I do think overall, you're not seeing much of a change out there in the economy. I think it's pretty status quo. And I actually think some of the economic data is very lagged behind. So I think some of the data we're getting right now, some of the quote unquote weakness in the labor market, probably is just representative like May, when the tariffs were starting to go into effect. Like, the data's really lagged behind. So in real time, I think we are going to see an improvement in economic data into the end of this year. And that's what partially helps to fuel a strong end of the year rally. I've been under the view for years now that the economic data is just very lagged behind, like multiple months lagged behind. So I still think that's the case today, because the data is just really not good. So these numbers are supposed to be for August for non-farm payrolls. They could be for June in all reality. Like, we could be getting like June numbers tomorrow. And I think that's probably roughly where we are. So let me know your thoughts on this down below in the comment section. That's what's going to move markets tomorrow. Keep in mind, weak September seasonals, you know, you're going to need some really good numbers to get stocks to move higher tomorrow. The bias is lower, and you have to understand that in September. So even if we have a really bad day tomorrow, it doesn't exactly mean we had really bad economic data. Basically what I'm trying to say here. So let me know your thoughts on this down below in the comment section. Hit that like button and subscribe to the channel. Again, if you want to come trade with us, it's not a recommendation. It's not a guarantee you will make a bunch of money. But I will tell you, we are in the right place at the right time, in my opinion. Contact a financial advisor before making an investment decision, because I am not one and I am not your financial advisor. With that said, link down below in the description of this video if you would like to come check it out. Have a fantastic rest of your day, and I will see you in the next one.